Level 1, $30 million. Around 10 o'clock in the morning, you are behind your laptop, still in your work clothes with plaster dust on your sleeve. You pull up the banking app for a minor purchase, and there it is, $30 million. You hold your breath for a brief second. You count it again, half worrying you have mistaken an extra zero. No, it is not a mistake. 10 years with partners, 1,000 meetings with subcontractors, and now this digit, the only thing your phone tells you about your performance. The phone rings, unknown number. You pick up and a solid voice on the other end states that they are calling from private banking. The tone is warm but professional, the kind of warmth that you can tell is trained and suggested, not natural. They say the system issued a warning about this deposit and that they wanted to introduce themselves. They say that at most big US banks, the entry requirement for the top tier of private banking is usually $10 million in liquid assets, and your balance is 3 times that. Your palms are a little sweaty, and for no good reason, you are nervous, but you are. 3 weeks later, the same voice is on the line, this one regarding a commercial gem that has not been revealed anywhere. That voice and an automatic grin pop across your face right there in the job site trailer, amongst workers that have no clue in hell what this moron is talking about. You feel like for the first time in a million years, you are in someone's head instead of at the bottom of their list. Level 2, $10 million. It is night. There you are, in your office chair, lights out. The only light on your face is the glow of the laptop screen. You just signed a $20 million investment for the next project. Your hands tremble a little, not because of fear, but excitement. You glance at the balance remaining in your account once signed. $10 million, right on the line. An email comes in 3 months later. Neutral tone subject. We are contacting you regarding your account. You open it. The notice goes on to explain that the bank assesses client tiers every quarter based on average liquid assets. And because you are right at the level of balance and not above, your file has been segregated into a different tier, but still in the same division, an arrangement where each banker handles about 50 accounts instead of 15. Your old banker calls. His voice is still polite, but it has a thin veneer of distance that was not there before. He says meetings will now occur every quarter rather than once a week. Your response is simply to say, okay, but a weight pierces your heart. You hang up. You stare blankly at the wall for 30 seconds. Nothing bad has happened, you understand that, but it feels like the way a sudden chill fills a room because someone opened a window somewhere. Level 3, $1 million. You check the project first thing every morning. For 9 months now, the same routine. A technical clause no one had noticed caused the city planning department to reject the permit. Again. Rebar prices went up. Again. Each month you are taking money out of your personal account and investing it into the project. It feels like trying to keep a sinking ship afloat with one finger over the leak. One afternoon, you open the quarterly statement. Your cash, $1,100,000. You slowly run your hand across your face. Maybe you're tired, maybe you're scared, probably both. The next morning, the old banker calls, the one who once offered you that exclusive piece of land. But this time, everything feels more formal. He explains that, according to the bank's policy, because your liquid assets have fallen below $10 million, your account has been moved from private banking to private client, a tier that most US banks begin around $1 million. He gives you the name of your new banker. You don't even bother writing it down. You're still trying to process the fact that the 3 people saved in your contacts, the ones who always answered your calls, won't be answering them anymore. On your first call with the new banker, the very first thing he says is, if your balance stays below $1 million for 6 consecutive months, you'll lose this tier as well. You hang up, and for the first time during this entire journey, a question finally slips into your mind. What if this project doesn't work? Level 4, $200,000. Your lawyer calls. He sounds exhausted. The contractor has filed a claim. If you refuse to settle it, the certificate of occupancy will be delayed. No certificate, no apartment sales. Then he gives you a number, $800,000. You close your eyes, take a deep breath. Okay, do it. That evening, you open your bank statement, $200,000. A number that only 1 year ago would have sounded enormous. Now, you simply stare at the screen. The following day, you walk into a bank branch for the first time in what feels like forever. Instead of a private office, you notice a desk in the corner. The sign reads, Premier Banking. You sit down. They explain that your balance has dropped below the $1 million threshold, so you no longer qualify for private client. You're now in this tier, one that most U.S. banks begin around $200,000. You apply for a short-term loan to finish the project. The banker explains that loans of this size are no longer approved at the branch. They have to go through Central Credit. How long will it take, you ask? Usually around a week. You nod, walk outside. The air feels cold, but somehow that word, usually, feels even colder. Level 5, $1,500. That quarter, the housing market was slow as hell. The units weren't selling as quickly as you had projected. The leftover cash from previous projects slowly disappeared, month by month, quietly. One evening, while paying bills, you check the banking app. $1,540. Your mind immediately starts doing the math. Office rent, car payment, groceries. None of them are overwhelming on their own, but together, they bring you right to the edge. The same edge as the bank's minimum daily balance required to avoid the monthly account fee. Then your car decides to break down. $400, $300. Whatever the mechanic needs, you pay it. A couple of days later, a text message pops up. Monthly account fee, $12 deducted. A flash of anger runs through your chest. You call the bank. The automated system asks you to choose from a list of options. A few minutes on hold, finally someone answers. She explains that it's a standard fee, but as a courtesy, it can be waived once per year. You reply, "Thank you so much." Your voice sounds a little less warm than you intended. After the call ends, you stare at your phone, and suddenly, that first phone call comes rushing back. The voice from 3 years earlier, the one offering you an exclusive piece of commercial land. Level 6, minus $50. It's the middle of the night, you can't sleep. Almost without thinking, you pick up your phone, scroll through social media, and open your banking app. At the top of the screen, bright red numbers, minus $50. For a moment, you think you've read it wrong. You look again. No, it's real. Just below it, a $7 subscription you completely forgot about. And underneath that, an overdraft fee, $35. Your stomach drops. It's the same feeling you had as a kid after breaking something, knowing someone was eventually going to find out. The next morning you call the bank, the same recorded voice you've heard 100 times. After several minutes on hold, someone finally answers. She explains that the overdraft fee is standard. It has already been waived once before, so this time, there won't be a reversal. You quietly say, "I've been banking here for years." A calm voice answers, "We understand, but our policy is the same for everyone." Later that night, another text message arrives. The monthly payment on your commercial property loan has bounced due to insufficient funds. This isn't a slap on the wrist anymore. For commercial loans in the U.S., late fees are usually calculated as a percentage of the missed payment. If your monthly payment is around $40,000, a 5% penalty is roughly $2,000, plus the returned payment fee. You sit down, both hands covering your face. A $7 mistake in your personal account has turned into more than $2,000 in debt on your commercial loan. Not because the bank was unfair, but because the contract you signed clearly explained exactly how this would work, and you skimmed over that clause during a much larger loan closing. The following day, you find yourself standing inside a bank branch again. The employee looks from the screen back to you. Her expression is neutral, not cold, not warm, just professional. She completes the transaction, hands you the receipt, and says, "Have a good day." The same sentence she says to everyone. As you walk toward the exit, you remember standing in this very building years ago, when a warm voice called to offer you an exclusive piece of commercial land. The bank was never really looking at you, not during any part of this journey. It was looking at a number. And every time that number changed, a different version of the same institution appeared in front of you. Not because someone decided to treat you differently, but because a small line of code, written years before you ever walked through those doors, was simply doing exactly what it had been designed to do.